There's declining spreads across the globe. So, are Indian steel spreads relatively resilient, or is there a slowdown really which would be imminent? Let's bring on board Naushad A. Ansari, the CEO at Steel Business at JSPL, joins us on the show right now. Naushad, morning. The Chinese steel prices have declined significantly, triggering a fall in steel stocks. Would you attribute the fall in steel also to China's new flexibility in setting steel output limits for individual provinces, thus rendering the cuts ineffective?
There are 2-3 points that I would like to make. Number one, if you really look at in the last 10 months what has happened in the world, the total steel production has gone up significantly, almost to the extent of 70 million ton. And majority of it has come from China. Despite China, we keep saying that China has reduced production, reduced the capacity, but the fact is that Chinese production has not come down. It is up almost by about 47 to 50 million ton. And the demand in China has come down significantly. That is also a fact, because earlier the demand was overstated, and that's how it was looking different. But the demand has also come down. So, on one hand the production has gone up, on the other hand the demand has come down there. So, therefore, obviously this will have the impact on the overall world steel prices, and that is exactly what you see happening. So, the fact is that the demand in the world has gone up not as much as the production which has gone up. So, demand is has gone up, let's say, close to about 3.7, 3.9 million ton, 3.7 to 3.9%, whereas the production has gone up close to about 4.7%. So, that is the reason why we see this, the prices have dipped down a bit, quite a bit, and obviously it will also has an impact in India, because today the economy is all interconnected. So the exports which were happening outside, from India outside, that has also significantly come down. So, therefore, more material is available within the country to sell, and overall, therefore, their prices have come down. So, that's what is the reason which I believe.
Okay. So, given the temporary truce between US and China, what is the potential you see for steel markets and steel prices in particular? If China does indeed fulfill the fair trade conditions in the next 90 days and a more permanent deal is brokered, hopefully.
So, that is a very positive development, because we do believe, one of the issues which always have been bothering the entire international trade community is that how is the US-China trade war going to play out. But fortunately, it is not escalating anymore. It looks like that it is going to be contained, and therefore, sentimentally everybody will, is just kind of a big sigh of relief, and I think the business as usual is going to make a very good impact on that. In any case, the Indian domestic demand is quite robust, and as long as the Indian domestic demand remains robust, we really don't have much to worry about. It's only a short period issue which we really believe. This dip in the price is only going to be short lived, because the Indian steel demand being robust, and still the export, the imports which are really happening, especially in the long product area, is not really significant. So, therefore, I think very soon the prices are going to come back to its normal level.
Right. So, is the robustness in Indian steel demand the reason why Indian steel spreads have been more resilient compared to the world? Do you see steel spreads staying resilient?
Absolutely correct. That's exactly what is the point, that while the entire economy is interconnected, and if there are major disruptions in the price internationally, certainly we get affected one way or the other. But the fact is that because we have very good demand, and the country, if we are still talking about 6.5–7%, and we actually see the orders are there, there are one other factor which kind of has also affected the price, because the cash availability in the market, the liquidity has been an issue in the last month or so. So, the international prices coming down combined together with this liquidity issue has also affected that. I believe now that there are possibilities of monetary policies getting corrected, and so we think that this problem will be sorted out very quickly.
But given that spreads are off highs, do you see profitability of steel companies coming off their decadal highs?
Problem on steel companies are still profitable. So that's perfectly fine. The steel business is such that there is always cycles. The margins will come down, go up. That's something which with the business happens always like that. Obviously, because of this price reduction, the margins, the spread will come down a little bit. But the good point for us is that we are still ramping up quite well in Angul. And as long as we are ramping up well, our cost is coming down. So therefore, we do believe that our EBITDA margins would remain almost to similar level compared to what we had in Q2. So while the spread is the NSR is going to come down a bit, but we are going to contain our costs in such a way that by and large the margins would remain in the same way.
Right. So how is it that you're seeing the current raw material supply scenario, especially iron ore, with the big mines in Karnataka being on a standstill? And then what about iron ore pricing?
So it is absolutely correct. I mean, if you look at the Indian iron ore prices in the last several months, I think the increase was unjustified from our point of view, because international prices did not really go up that significantly, hardly any, and in India it went up almost by 100%. So now we do believe that the prices are going to come down, both from the point of view because the international prices have also started coming down, and also people see that this is not a sustainable price at all. So you already have seen in Orissa also the prices have started coming down. NMDC has also reduced their prices, and going forward we do believe the discussions which are on is all about reducing the iron ore prices, because it needs to come to a level where all the plants are at viable stage.
Let's talk about your company. We understand you've lowered your FY19 India steel volume guidance from 7 million to 5.8 million, million ton rather, because of slower ramp up at Angul. Is that the case?
Yes, the ramp up is going on reasonably well. Earlier we had talked about close to about 6.5 to 7 million ton. Now we are talking about 5.8 to 6. So there is a marginal decrease from that point of view. We are still trying to push it to higher levels, and we'll see what's the right number that comes. Other than Angul, we also had some issues in Raigad. There were 1 or 2 breakdowns which were unexpected and so on. So that also had adversely affected a little bit of production. But by and large, the Angul ramp up is happening quite well. The plant is coming out beautifully, and it's only a question of weeks and a couple of months or so that we are really operating at the kind of levels that we want really to operate.